Oil prices took a dip this week, and no, it's not because everyone suddenly bought electric cars. The news cycle, much like a gas station bathroom, is a volatile and unpredictable beast. And this week, the pungent aroma of geopolitics is particularly strong. The conflict in Gaza, now in its second month, has been a major driver of uncertainty in the oil market. Traders, much like the rest of us, hate surprises, and wars, especially those with the potential to spill over into major oil-producing regions, are full of them. The latest whispers of a potential ceasefire between Israel and Hamas have injected a much-needed dose of, dare we say it, optimism. When the bombs stop falling, even temporarily, traders tend to exhale, and oil prices often follow suit. Now, before you start practicing your victory dance at the gas pump, let's be clear. This ceasefire, if it even happens, is as fragile as a spiderweb in a hurricane. The situation in Gaza remains incredibly complex, with a multitude of actors, interests, and grudges, enough to make a Real Housewives reunion look like a picnic in the park. The market is clearly reacting to the possibility of a ceasefire, says energy analyst Sarah Emerson. But it's important to remember that the underlying tensions haven't gone away. She's right, of course. It's like putting a band-aid on a bullet wound and hoping for the best. The international community, meanwhile, is doing its best impression of a dysfunctional family at Thanksgiving dinner. The UN Security Council, after weeks of bickering, has finally managed to agree on a statement. A strongly worded statement, mind you, but still just a statement. Adding to the oil price drama is the resurgent US dollar. Like that one friend who always peaks at the right moment, the dollar is having its moment in the sun, reaching its highest level in months. And because oil is priced in dollars, a strong greenback makes it more expensive for buyers using other currencies. Think of it like this. Imagine going to a lemonade stand where the price is pegged to the value of your neighbor's prized Beanie Baby collection. Suddenly, your neighbor's Beanie Babies become the hottest commodity on the block, and your lemonade just got a whole lot more expensive. This dollar strength is partly due to the US economy's surprising resilience, which, let's be honest, is a bit like watching a cockroach survive a nuclear blast. You're impressed, but also slightly terrified. Section 4. Beyond the battlefield. Geopolitical tremors and economic shockwaves. The war in Gaza, however, is just one piece of the global jigsaw puzzle rattling oil markets. From the ongoing energy crisis in Europe to the economic slowdown in China, the world seems to be caught in a never-ending game of whack-a-mole, with each crisis popping up just as you think you've got things under control. Tim Snyder, the geopolitical backdrop remains incredibly uncertain. We're seeing a confluence of factors that are all contributing to volatility in the energy market. He's not wrong. It's enough to make you want to invest in a cabin in the woods, stockpile canned goods, and wait for the apocalypse. The war in Gaza has also highlighted the fragility of global supply chains. With tensions running high in the Middle East, the Strait of Hormuz, a vital choke point for oil shipments, has become a focal point of concern. It's like watching a game of Jenga where someone just pulled out the bottom block. Section 5. When tankers collide, supply chain concerns add to the mix. And as if we needed another reminder of how quickly things can go sideways, 2 oil tankers collided near Singapore this week, briefly sending shivers down the spines of traders already on edge. While the incident turned out to be relatively minor, it served as a stark reminder of the delicate balance between supply and demand in the oil market. One minute you're worried about pipelines, the next it's tankers playing bumper cars. It's enough to make you want to give up fossil fuels altogether and power your house with hamster wheels. The good news, if you can call it that, is that the world is awash in oil right now. OPEC Plus, the cartel of oil-producing nations, has been pumping crude at a healthy clip, and US shale producers are also eager to cash in on higher prices. Section 6. A world on edge, navigating the uncertain future of oil. So, what does it all mean? Well, if you're hoping for clear and definitive answers, you've come to the wrong place. The oil market, much like the global geopolitical landscape, is about as predictable as a toddler on a sugar rush. One thing is for sure. Buckle up, Buttercup. We're in for a bumpy ride. Stay informed, folks. Read beyond the headlines, question everything, and maybe, just maybe, consider investing in that electric car after all.